Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York on Tuesday, April 19th, 2016, and this is the daily report for gold and silver. We do have sharply higher pricing across the board in the precious metals. Gold trading up 1.38% on the day, a $17 gain, $12.52 and change. That's our current print. The low $12.29 on the day, the high $12.58, so we're about $6 off the high. And as I said, we had almost a 1.5% gain on the day. But traders, that's nothing compared to what we're seeing in silver right now. Silver up about 75 cents on the day, just below $17 per ounce, trading up 4.57%, almost a 5% gain on the day, starting to sound like oil in terms of the percent gains and drawdowns when we look at silver. We talked about the fact last week that there certainly seemed as though someone was making a play for that market. That's quite apparent. We're going to take a serious look at silver, look at some charts, and I'll tell you where I think silver could be headed over this next month. All of that on today's daily report. So absolutely no doubt, an extremely exciting day as we see once again trading to about $12.50 per ounce, up about $17 on the day. Now, I really tackled with the question as to whether or not we should jump in on the long side as the market was trading last night, and I decided not to pull the trigger. And so most importantly, I want to explain what the thought process was as I analyzed the market last night and what I believe we could possibly see coming up in the marketplace itself. We are looking at a half-a-day chart, standard candlestick format. And I've got this chart duplicated in Henkinashi because we can definitely get some information by looking at that chart. But as we look at the recent activity, the one thing that we have really characterized is that in terms of our lows, we have had a succession of higher lows as we go into the market. In terms of the highs themselves, we have seen a succession of lower highs, and therefore I have been under the belief that we're trading in a compression triangle, a pennant breakout, so to speak, if you will. And as I watched the market trade last night, what I did notice was the fact that the market was breaking above this resistance line, which to me is extremely critical and important, because if we get a break above this line, it's called the thrust, that's telling us we want to be long. However, at the same time, we need to see that price point sustained for at least a full day or a full cycle and form support rather than moving back down. And you can see that the market closed just under that particular price point, and therefore this could be our resistance area. And that's what caused me to hesitate, is I did not want to enter the market at the top of this trading range. Even though I'm bullish and I think the market is going up, what I didn't want is something like this. If we're correct in that this is a wave 1, a wave 2, our wave 3, and we're in our wave 4, now obviously a breakout above this would signal a strong buy signal. There's absolutely no doubt, and our next target would obviously be 1287 on the way up to 1300. However, if it cannot break through this particular price point and this maintains a resistance area for now, in other words, what we see is that we have a completion of this short fourth, but we come down for one final kind of a test of these lows here, and this support area holds, because obviously if it would go to the top of this range, then trade back down to the bottom of the triangle, and then of course break through that, that gives us some other information, and that tells us that there's an opportunity that we could see the market going lower. But my sense was that if it backs off, we will know, and the way that we'll know that it's backing off is today we will not get a close above this particular price point, which in fact we did not. If we get weaker action over the next day, then that tells me that we're probably going to complete this very, very short leg, and that's when we'll hit this thrust, and that's the moment we want to buy. That's the first technique. Secondly, if the market simply breaks above this price point in this area, we'll know we want to buy. If the market breaks below this support area, well, then we'll know we're in a sell mode and we might issue a sell signal. But as it stands right now, my sense is that we'll probably see it back off just a little bit and then get that final thrust. And as I said, we get long either here, or if it breaks tonight or tomorrow without backing off, we get long here. So in other words, we'll get long if it breaks above resistance here. We'll also get long, or we'll get long, I should say, if the market backtracks and finds support at the bottom of this support channel. So I absolutely want to take a look at silver. Silver has just been on an absolute tear for the last 3 weeks. Took everybody by surprise 3 weeks ago. We took notice last week, and this week it's got all of the precious metals traders kind of standing on their head. What I'm looking at in terms of where I think this market could go is as follows. We're looking at a weekly chart, so we've got some real long-term data in here. We've got 2 fib retracements, one from about $21, which was this high back in 2014. The second fib retracement starts from these highs at about $18.50. And then what we do is we look for harmonics. Harmonics in a fib retracement is simply areas where you have 2 different fib retracement sequences, meaning starting from different price points, coming up with the same price point. And we get 2 beautiful fib harmonics when we look at the market in this way. By putting one of our fib retracements with a top at 21 and the other one at 1850, both concluding at these lows at 1368. The first really strong fib retracement area we get with harmonics is 1667 to 1663. Now, as you can see, this is a true harmonics because we have a 38% retracement, which is the longer of the retracement points. You can see they're put in the center. And then we also get a 61% retracement, and that's of these 2 shorter particular price points, or sequences, I should say. Excuse me. Let me change my color here. So then we get our harmonic 61, our harmonics at 38. Then we get another harmonics. We've got this as the top of the market, so it's automatically in there. It's not a fib level, but you get this 61% retracement of this longer move from here to here. Really matches up quite eloquently with this price point, 1850. So what am I thinking? Well, the market substantially held above 1660, call it, just to round it down a little bit. The next real level of any kind of resistance comes in at around 1760. However, obviously $17 per ounce is an area that we want to see if it breaches that as a psychological level. But we don't have any major resistance in the market till about 1850. So depending on how this market trades over the next couple of weeks, if we can find really good support here, as I said, 1760 and then 1850, this is a market we certainly want to consider on the long side if we get a follow through and a continuation, and most importantly, we find really solid support on a technical basis at this price point of double harmonic. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.